Well, there you go. The hidden bearish divergence is now playing out on Bitcoin. Where are the next price targets, and how are 3 ways that we can make money during this correction? Alright everyone, welcome back to the channel for another update on Bitcoin and Solana. It's currently Tuesday, the 2nd of April. Not too much news to cover today. I do, however, want to dive through a few things before we get into the charts and talk about why I personally think this correction could last a little bit longer. So, starting off with Bitcoin, let's look at the total liquidation chart. In the past 24 hours, we have seen about 304 million worth of longs liquidated. So, moving on to the liquidation map, you can see if we're looking at the cumulative longs, they've mostly been wiped out. What we've been talking about on the channel recently is that the funding rates have been too high and the leverage has been too high, and a de-escalation of these would be very healthy for the market. And that's what we've saw. Most of the longs are now out, and now we can see cumulative short positions are stacking up. Now, the funding fees are still super elevated, but these are probably going to start coming down as short positions are taking narrative in the market at this moment in time. As you can see over here on the Bitcoin funding rates, they're currently sitting at 0.033, which is the highest they've been at least in the past year. So it's not surprising to see that when that correction did come, it's a big red candle to the downside. This is all of the longs getting taken out of the market, and this is extremely healthy, especially in a bull market, to have a correction like this, so you can reset leverage in the market, judge where you are in terms of the actual spot BTC price with no leverage, and then continue from there. However, the funding rates are still extremely high, and there are a few other reasons why I think the correction could continue for a little bit longer, so we'll talk about these. The main reason besides what I just talked about is really the ETF flows. For the past 2 weeks or so, we have not really seen any ETF flows whatsoever, which is interesting. If we scroll back further to this, you can see as soon as the ETFs come out, if we're looking at the cumulative flows, they were just buying every day, every week, every day, every week until the 15th of March. At that point, that is when there was a slight drop off to the downside in terms of accumulation, and some of the ETFs took profit on some of their bags. Now, we did have a move back up to the upside, but this was all lower highs, and at this moment in time, we're stagnating. For the past 2 weeks or so, we're not really seeing too many flows. So for example, yesterday, on Monday, we saw negative 85 million. On Friday, the week before that, 182 million inflows. The day before that, 240. The day before that, 410. And then, you go back a few days and it's negative 50, negative 100, negative 250, negative 320. So it's all very neutral. Previous to this, we saw, 900 million, 800 million worth of inflows a day. If we are starting to see a little bit of a stagnation in terms of the ETF inflows, then it's going to allow the markets to stagnate, and it's going to mean that this dip may not be propped up as much as previous dips. Another reason is, of course, the halving is right around the corner. It is 16 days away, and typically on the weekly time frame, we do either correct or stagnate into a halving. So I wouldn't be surprised if we just lollygag and chill for the next few weeks or so, get the halving out of the way, then maybe in a month's time we can come back and look at a face tear back up to the upside. But there's one more reason before we dive into the charts. Not something that I imagine most of you will care about, but nonetheless something that will carry the markets. This is the economic data that we've got coming for this week. Now, yesterday on Monday, we had the US ISM Manufacturing PMI Index come out, and this came in much hotter than expected, which is a sign that inflation is still quite rampant. We also had the US ISM Manufacturing Prices. These came in much hotter than expected. There are some other things that you want to keep your eyes on. Mainly tomorrow on Wednesday, we've got Fed Chair Powell speaking. So due to the nature of the inflation kind of creeping back up at this moment in time, it's probably expected that he's going to say something very hawkish, and at which point people are going to assume that the interest rates are probably going to go up and, will be a little bit less dovish in terms of monetary policy than we've been in the past few weeks or so. It's also interesting and important to note that today the US job openings came out, and these did drop to the downside. Now, this can signify 2 different things. Number one, it could signify that job positions are being taken in the economy, which is good. Or, on the other hand, if job openings are decreasing, it could just show that there are less jobs employing at this moment in time. And of course, it's the latter. If we're looking at the US unemployment rate, the previous reading we saw had a massive negative shock with an increase up to 3.9% in the unemployment rate. And this is slowly creeping up. So all in all, the overall health of the economy it's been stagnating a little bit, but recently in the past few months or so, inflation's creeping up a little bit and we are having a tiny bit of negative data set in. This is why when we come over to the S&P 500 in this week, we have had a negative shock from 5,271 down to 5,189 with a nasty bearish engulfing candle on the weekly time frame, and I expect this to continue until we kind of come into Powell's speech on Wednesday, at which point I'm going to have to keep you updated. I'm going to have to let you know what are Powell's thoughts. Is he hawkish? Is he dovish? What are the implications on the interest rates? And then how will the markets take that information? But those are the main reasons why I think the continuation to the downside could last a little bit longer for Bitcoin and the S&P 500. S&P 500 is down about 1% today. And in terms of the DXY, we're kind of starting off the week okay. Like, I really can't say that we're super strong for the DXY right now. I still think we are inherently weak for the DXY right now, but I do just want to let you know that in terms of the micro trend, I think this could be propped up a little bit, and I think the S&P 500 could probably pull back a tiny bit before that next leg to the upside. But what's the main takeaway for that for Bitcoin? Really keep your eyes on the spot ETF flows. If you want to see, this kind of explosive rally that we've been witnessing, this is because the ETFs have been buying up all of the supply on the exchanges, mainly Coinbase. They've just been completely taking all of the Coinbase stock. Coinbase's Bitcoin on their balance sheet has been decreasing because these ETFs have been buying. For the past 2 weeks or so, we haven't seen that too much. So we need the ETFs to come back in if you want that next explosive rally. At Bitcoin's market cap, it's highly unlikely that retail is going to do it by themselves. Now let's dive right into the charts. So the two main bearish charts that we talked about in our previous video, not the Solana Chapter 2 mobile, which by the way, you should definitely watch if you do want to make some money. The video I'm referring to is this one over here, Bitcoin halving correction. This is where we talked about the most recent updated charts on the channel, and this was one of them. This was the bearish divergence that was forming that we gave you a warning of. Now you can see the price has been making highs, higher highs, higher highs, higher highs, and the oscillator has been making highs, lower highs, and lower highs. And in our previous video, we said, hey, this is the high up here. This is the last time we saw continuation on the bearish divergence. We have just started to come up, and this is exactly what we drew. This has been on the chart for a few days now. This was the rounding top that we mentioned, and this was a sign of weakness. As you can see, it looks like the bearish divergence is starting to play out, and it looks like we're going to start coming down to the downside. And also, the weekly stochastic RSI, this was another dead giveaway. We were pretty topped out, and we'd already crossed bearish when we were making that video. So this is one of the reasons why we're moving back down to the downside at this moment in time of many. Now, there's two different price targets that I've got my eyes on right now. The first one is going to be the most conservative. This is round about $59,000 to $60,000, the bottom of this local trend. At which point, if we do come down to this level, I believe that we could reset the bearish divergence, which is playing out on the RSI, and we could approach the markets from a new norm. At which point, you would really be hoping that the funding fees would be decreased to allow for more leverage to come back in anew after the funding fees and leverage has been reset in the market. At which point as well, if that 60,000 is the bottom, you're going to want to see ETF flows start to come back into the market. Of course, you can keep up with both of those on the channel. Also, if you're interested, I'll leave the link to both of these down below. But as always, turn notifications on YouTube and I'll keep you summarized on all of the main things that I think are important anyway. You can also see, if we zoom out on the weekly time frame to our next chart, this 60,000 region, anywhere between 62,000 and 60,000. This is the first all-time high that Bitcoin put back in the 2021 bull run before the 69,000 all-time high. So if we just kind of correct into the halving, we hit the halving and then, kind of just chop sideways for a little bit and then continue up in about a month's time, I think that is really the most conservative situation that we could see on Bitcoin at that moment in time. We've already had a massive bearish engulfing candle on the weekly. We could just move down another 10% to 60,000 or to 59,000. If we did trade sideways from that point, that would allow the stochastic RSI to fully reset. That would probably allow the S&P 500 to find a local bottom, and that would probably encourage the ETFs to start coming back in and buying. because I think there's going to be a lot of hype around the halving this year, especially with institutions. But I digress. Those levels, 62,000, 60,000, and 59,000, round about this level here, that's going to be the most conservative. What happens if we dip beneath this level? Then we could come all the way back down to the start of this trend over here. Now, this box is important for two different levels. If we're drawing our Fibonacci from the bottom of the local uptrend to the top, you can see this level right here, the 618 fib at 52,000 is going to be extremely important. Now, if we're looking at this as a box, you can see this is the absolute bottom of that trend, 50,250. I personally don't think we'll be going any lower than that. But of course, at this moment in time, I've got my eyes on 60,000. I'm going to, at least in the immediate short term, keep that as my main target. And then if we do come down to 60,000 and we don't see any material changes in the leverage, the longs, the liquidations, the funding rates, and the ETFs buying into the supply, then we'll have to reevaluate and say how much more likely it is that we go down to 50,000. At least as of right now, I'd say it's about 70% likely that we bottom around 60,000. Another important reason why we could get a little bit more continuation is this. On the daily time frame, the stochastic RSI came up to around about 30 and it's coming back down. But the main reason I'm looking at this chart over here on the CME futures is this. We do have a CME gap to fill around about 63,600. So even in a really conservative bet, you could just see another reason why we're probably coming down to around about that 60,000 mark before we see any kind of pump back up to the upside. So those are my thoughts for Bitcoin. For now, I'm going conservative with 60K and then we'll take things from there. Now, moving on to Solana. Solana's interesting, and I'm actually going to put an interesting video out very, very soon about another reason why I think Solana could continue up quicker than Bitcoin could. We talked about this briefly in this video, Bitcoin halving correction equals Solana alt season, but there's a video I want to make regarding Bitcoin halvings, alt seasons, Bitcoin halving corrections, etc. So just keep your eyes out for that. A little bit too much for one video. The main takeaway here for Solana is that I think this is going to be one of the last dip opportunities you're going to get before we move back above that previous all-time high and we just start exploding up. We've mentioned this every single time Solana gets above these peaks. Every single time it makes an all-time high and it clears it, it goes absolutely parabolic. So it doesn't look like we're quite ready to breach $270 yet, but once we do, I think we'll just start zooming. And as you can see, this is the Bitcoin halving that happened in 2020. Solana kind of broke down into it, and then it started slowly grinding up and then just exploding much quicker than Bitcoin did. This is one of the reasons why I think Solana is probably likely to correct into the halving, and then that's why I think we're going to see an alt season afterwards. In the immediate short term for Solana, if we're coming onto the 4-hour time frame, you can see we previously detailed something of a bullish pennant slash asymmetrical triangle. We were talking about the price target of the asymmetrical triangle, and as you can see, this is looking to be an SFP swing failure pattern. We breached the top of the triangle. We came up, if I come over to the weekly time frame, you'll be able to see it here, the 786 fib. We hit our head against this around about $208. We literally hit $208 before we started coming back down to the downside. So as you can see, this was looking like an SFP, swing failure pattern, failed move equals a fast move in the opposite direction. And that price target in the opposite direction to me is going to be $165. This is going to be the macro 618 right here. I think it'd be extremely healthy if Solana has a slight cool down, kind of chops sideways slash down, properly retest the 618, and then, in a few weeks of the halving taking place, I think we just grind up. Once we take out that all-time high, boom. I think this is the trajectory for Solana. In fact, I might actually just keep this line on the chart and see how well this plays out, but I'm going to make it a little bit less conservative than that because I don't think it will take too long for us to start going on this parabolic run. So we'll just keep that there as a kind of rough guideline and we'll see how that plays out. But here's my most bearish prediction for Solana. We've got another very important point of interest, anywhere between $144 and this top here at $127. Now, this is not my prediction. I personally don't think that we're going to break down that low, but let's just say we did. Let's just say the markets absolutely eat shit and crash for the next few weeks or so. That would be a 40% correction for Solana down to this most bearish prediction. And in bull runs, it happens. It's happened before. This is a blue chip project. Like, I don't think Solana's going to crash, 60, 70, 80% in a bull run. I think it's probably going to do something more along the lines of Ethereum, a 30, 40, maybe 50, but at least that's not what I'm eyeing right now. The main target that I'm looking at for Solana is, like I said, gonna be at $165. This 618 is a super important level, so this is where I've got my eyes on. So that's the charts, that's the news for today. However, there's 3 things that I want to just quickly mention, 3 ways that you can make money while the charts are going down. The first way is going to be to pre-order the Solana Chapter 2. In case you guys didn't know, the Solana Chapter 2 is following the same airdrop structure that happened with the Saga 1, and people are still fading this. Yesterday alone, a single airdrop of Mu was airdropped to every single Solana Chapter 2 pre-order holder, and at the peak it ended up being worth $250. That was literally just about 12 hours after the airdrop. When the airdrop came out, it was about $200 or so, so even if you sold it immediately, you would have made good money. And the pre-order cost for most people was $450. Right now it's priced at $500, so even if you bought it for $500 and you got this, the mobile has paid for itself in half in a single airdrop. I recently made a thread over on Twitter talking about how my $450 pre-order has already paid for itself in 6 weeks. We got that $250 airdrop of Mu. The week before that I got a $155 airdrop, the week before that I got a $40 airdrop, and there were a bunch of smaller ones which totaled to over $450. So I think one of the easiest ways to make money is spend $450, get a Solana Saga, you're going to have a cool phone, and you're going to just get plastered with airdrops week after week after week. So even if the markets are down, like when I was looking at my portfolio, I was like, oh, this wallet is down, but oh, hey, it's up $200 now because I just got an airdrop. So it's just small things like this, and then you don't have to keep the airdrops. You can jeet them into a favorite coin, you can just sell them for Solana, you could just sell them for USDC to reimburse yourself for the cost of the mobile. Highly recommend you get one of these. If you do, please use my referral code, and I'll leave that in the description down below. The second way you can make money for completely free is to start using something called getgrass.io. They're building a layer 2 on top of Solana. Basically, what happens is you run the application and you use your spare internet broadband to mine their coins. It's not traditional mining, so it doesn't cost, a ton of electric. It really just uses your spare broadband, so it won't really affect your electricity bill whatsoever, but you just turn this on every single day. It runs in the background. It's running in the background for me right now, and it will earn you these points. And then you can come over to Whales Market, and if you really want, you can go over and trade the points pre-market, and you can sell all of the points. I'll also leave my referral for that down below. And the third way to make money is to double down on this dip on your favorite altcoins and your favorite meme coins. Don't get jeeted out of the market. Don't sell at a 60-70% drop, because the people who are going to make the most amount of money in this market are going to be the people who pick the blue chip winners. They're going to see a 60-70% drop in these altcoins, and they're going to buy the dip. And then, sooner rather than later, these altcoins are just going to do 2-3x's back up to their previous highs. And a lot of people that were scared are going to buy at the highs, and you're going to be buying when these people are selling. Personally, for myself, I already own enough Bitcoin. I've been DCAing this since 2018. For Solana as well, I've been making a lot of money in the meme coin market, so I've made a lot of Solana. I don't really feel like it would be worth my fiat allocation to buy more Solana, but one thing that I am doing is I'm using some of my profits in USDC and Solana to double down on my favorite Solana altcoins, favorite Solana meme coins. The 2 ones that I'm going to be buying the dip on literally right now is going to be Dancing Triangle and Chunky. 2 amazing projects. I'm not going to say why I like them. If you've been watching the channel, you know exactly why I like them. So for today, my friends, that is all I've got. Hope you enjoyed the video. If you did, smash like on the way out. See you soon. Peace.